morning. You're watching the market right here on 18 Hour with me, Ashraf Faridi, Aman Dabash, Nikunj, Dalmia, and the SGX Nifty once again is indicating a mildly positive start. But that's okay. We're pretty much nearing that 18,400 print. The Nifty Bank almost made it to that all-time high. We were just short of 10 paise in trade yesterday, so practically in any case there. And the broader markets as well are outperforming. And like Nikunj, before the show, you were talking about as to how the HNI participation is low. Mutual funds are full of cash. So reasons to believe that there's further headroom to the upside in the market.
So Aisha, what drives the market in the short term is always skepticism. The disbelievers or the naysayers have to turn believers. So let's say 6 weeks ago, nobody believed that market would make a comeback. Now that markets have made a comeback, everyone is saying, oh, we missed it. Yeah. How could we miss this grand summer one-way rally of 2023? And that is something which is pinching everybody.
Traditionally, when nothing happens in May and, the phrase goes as sell in May and go away.
Yeah, maintaining that don't sell in the month of May.
Yeah.
And don't go away anywhere. Please watch ET Now every morning.
because we give
exactly.
Yeah.
Now, just to put things in context here, what makes me reasonably confident that why the upturn in the market will continue is because FIs have just about made a comeback and they are coming back. Yes, it may look like a long streak of buying by foreign institutional investors, but in quantum, they're still negative for the year, guys. Foreign institutional investors may have bought for 13 days on the trot now, but they're still negative for the year. And the number for 2023 was one of the biggest, 2022 was one of the highest sell figure they've ever had. So I think that this is just the turn of a global allocation move which is coming back to India. Let's look at mutual funds. I've been told the cash levels in mutual funds right now are almost at 5%. Flows into SIPs are coming on a daily basis. That clearly tells you that mutual funds are also sitting on cash. HNI investors and ultra HNI investors, when I speak to them, they are excited that their NAVs and the portfolios have gone higher, but nobody really has managed to really, this is not like the COVID comeback rally where some of the big ultra HNI investors, they got their call right. I don't think any ultra HNI investor whom I speak to on the record has really participated. Then you have the trader. Look at the open interest. Yeah. Look at the open interest in the Bank Nifty. Look at the open interest in the Nifty. There is just no participation. There is so much of disbelief. There is so much of denial. And now I think the FOMO has kicked in. So, the word FOMO, I use it so loosely. But that's how it is. FOMO has kicked in.
Yeah. I mean, even yesterday, to think of it that you were optically there at an all-time high on the Nifty Bank, ICICI Bank, Kotak Bank, none of them participated in the move.
Yeah. So if you specifically talk about the Bank Nifty, I think let's discuss it. Yeah. The Bank Nifty was at these levels in December. 14 December, the Bank Nifty was at this level. Now, from 14 December, if you map what stocks have moved, you've got a big change there. A big change there because SBI has been flat, IDFC Bank is up, AU Small Finance Bank is up, Kotak is up, and HDFC Bank has started outperforming. My limited point here is that while the Bank Nifty has come back to same levels, there are three big differences. Difference number one, the composition of the Bank Nifty has moved from PSU to private, and within private, small tier private banks are outperforming. B, the level of open interest I think is very low if you compare this with what the level of open interest was in December. And third and most important, Aisha, Avan, is we've got 2 quarters of earnings. We've got 2 quarters of earnings which have come into the Bank Nifty. And from FY23, we are in FY24. So you're talking about next year estimates, which means on terms of valuation also, because the banking sector is growing at 20% plus, you got the Bank Nifty which has come back to the same level, but in terms of valuation, it is 15% cheaper.
Yeah, and just pointing out that stark difference in the last leg of the rally when the Nifty Bank was near those life highs, it was the likes of PNB, Bank of Baroda, Bandhan Bank that really scaled up or did a lot of the heavy lifting, and then Axis Bank. This time it's been IDFC first, as well as IndusInd, Bandhan Bank, as well as SBI. Well, that's the Nifty Bank aside. Yesterday we went all guns blazing, so close, and yet it was almost a touch and go moment. But the other trade setup points that we want to discuss is the fact that you've got FIIs, yes, they're buyers for 13 straight sessions on the trot, but the bond yields as well, they continue to decline. In fact, below the 7% mark, that's been for the first time or the lowest level since we've seen since March of 2022. And a fall in the bond yields typically, Nikunj, translates into lower borrowing costs for other entities as well.
Bond yields coming down is good news for you, me, Ash, and everybody in this room. Because home loans, car loans, personal loans, all of them, they start coming down. What are bond yields? Bond yields are essentially an indication of where the bond market feels the interest rates are moving and inflation is moving. The bond market post that inflation number is telling you that, okay, interest rates in India have peaked out. Shaktikanta Das, kudos to him, was absolutely right in not increasing interest rates in the last policy, even though Fed is increasing interest rates. So he's taken a bet on India rather than getting over-influenced by what the Western world is doing. So full marks to Mr. Das in terms of how he was able to see through the nuances of Indian economy. Bond yield comes down, which means that in the short term, bond markets are going to rally. And fixed income products, bond instruments, I think they will see a shore up in NAV. But more importantly, if the cost of borrowing comes under control, that's good news for consumer, that's good news for corporates, that's good news for even equity underlying valuation. So bond yields coming down, if they've really peaked out, which it appears to me, because commodity prices have fallen much more after the latest print of inflation. I think the scare of inflation, which in a sense has been the albatross for Indian market, I think is going away. See, what was the problem for India? There were two problems, inflation and valuations. Inflation and valuations. Valuations are okay after the time-wise correction, and inflation has peaked out. Now, what is the worry? And still there is no participation. So the believers have to come. They'll have to buy.
Absolutely.
That's the only way out.
Absolutely. Okay, let's see what we actually scale up in trade today. But, here's an interesting quote. The fact that inflation has come down, spending is increasing. But that aside, I don't know if there's any correlation. That Zomato, by the way, on Mother's Day, they tweeted saying that love for our moms outshines everything else. Here's proof that Zomato recorded the highest ever number of orders yesterday. That's 150 cakes were ordered every minute. Grateful to be part of your day. That's the tweet coming in from Dipinder Goyal. Of course, it was a Sunday as well. Typically, it's over the weekend when these platforms see highest traction. But yeah.
Everyone's showering their mums with lots of sweets from Zomato.
Yeah, and Zomato and Swiggy just making it easier. Even though there is a valuation cut again for Swiggy this morning.
No, Aisha, see, what is really unique about the food delivery systems now is that they are becoming part of your daily life.
Yeah.
They're becoming part of your daily life. They pretty much know that how to pick up the pulse of the Indian consumer.
Yeah.
Whether it is a Mother Day or whether it is a New Year celebration, they pretty much are there, and they in a sense are enticing you to spend. Spend that extra 1,000 rupees, spend that extra 1,500 rupees, and that's the advantage what you have
Quick
when you have
delivery.
a network, quick delivery, the whole experience of app. Now what amazes me is that Dipinder is talking about the number of deliveries which were done on Mother's Day are actually equivalent to what they did on 31st of 31st of December, which typically means that in terms of the real dependence on the food delivery system is, I think, increasing immensely.
Yeah.
I don't think, again, going back to that same point, that the ONDC can give you this kind of a Mother Day celebration.
Not yet, for sure.
No, Aisha, it'll be see, you have to realize that ultimately it's a government power app. And government power app, who's going to take the initiative of, let's say, making the presence felt of Mother Day? Who's going to be, making you, who will draw you to your network? When you look at typical Mother's Day, Men's Day, Women's Day, these are draws which have been created by marketers so that you enjoy that moment. I don't think ONDC is going to be doing that. Who's going to be creating that draw? ONDC is like the platform where you want to put your product and you are able to do an e-commerce transaction. That's my limited view.
Will be difficult to also deliver cake.
Exactly.
So, yeah, okay. Lot of key numbers as well today. You've got Bharti, you've got BOB delivering its numbers. We've just seen what a blowout set you had from DLF yesterday and the kind of, charged up or domino effect it had on the rest of the realty pack as well. It's a couple of ancillaries as well, like Kajaria Ceramics as well is due to report its numbers. And then, of course, there's IOCL as well as VMart too. I think key would be BOB and Bharti amidst this.
Yeah, BOB important because you really want to hear after what Canara Bank has done in terms of those write-off provisioning, what BOB has to say. That's one. Second, Bharti Airtel, I don't think market's expecting anything. The large sugar rush which happened after the Jio roll, after the data consumption binge, I think that's behind us. B, the war, that uptick which came because of pricing into Bharti's balance sheet couple of quarters ago, that also is behind us. So really from a market standpoint, BOB is important to get a clarity in terms of where the PSU banks would be going in terms of their weighted average provisioning, and Bharti in terms of where the data business has started stabilizing. Nobody is expecting anything big and blowout from Bharti, but from Bank of Baroda, the curiosity levels are going to be very high. I think markets would also like to understand from Bank of Baroda for forward-looking things, because they've been coming out with consistently good set of numbers. The stock in last 1 year is up 78%. So for Bank of Baroda to stay here, they have to deliver. They have to talk about the MTM losses and impact of how things essentially would move in FY24 for them, given that the base has become high.
Okay, so all of that will be critical, and yes, it is a busy day on the earnings calendar because, as Aisha said, there's other numbers, Granules, Kajaria, as well as IOC, etc., that the street will closely be monitoring. But let's also take stock of how things are shaping up globally. You had the US markets overnight, which wrapped up in the green. Asia this morning is looking pretty much stable, barring you've got the Shanghai markets, which are flat, as well as Australia, which is in the red. But getting a sense as to what the global commentary is as well, and Vinny's here to give us a roundup of just that. Morning, Vinny.
Good morning. And the new talk of the town that has actually become in the markets is the US debt ceiling limit crisis that has been looming, and the worry around that as well. Now, Democrats and Republicans are actually in talks. The lawmakers are in talks whether they will be suspending to increase the limit or they will be increasing the limit. But we have comments coming in on that. Now, Treasury Secretary Janet Yellen, she's warning about this concern that, US is already paying a price in terms of the failure to whether increase the rates, increase the debt ceiling limit, federal debt limit over there, while they're also in talks with the White House to actually increase this limit, whether this is going to happen. Now, if this is not happening or happening, this is causing a bit of a worry in terms of the consumer sentiment coming in. The confidence of the consumer is getting impacted, and that's a worry coming in that she's highlighting. She's also saying that, the treasury borrowing cost has also seen an increase substantially because of these concerns and security, especially for the securities that are maturing in the early June as well. So yes, concerns around that are looming, and she's warning about that as well. Moving on to the next comment that we have it's coming in from Fed's Bostic. Now, he's highlighting in terms of the inflation, that high inflation is suggesting that maybe there is a chance for one more rate hike that he could see. There's a bias of one more rate hike that we could further see coming in. And tackling inflation is the first job and job number one that the Fed should be working on as well. So that's the highlight coming in from Fed's Bostic. Now, other commentaries that we have is coming in from Chicago's Federal Reserve Bank President Austin Goolsbee. Now, he's highlighting that maybe a rate hike, the May rate hike was a close call coming in for him over there, and a lot of impact on the rate hikes is still in the pipeline. He said that yes, it's not a worry in terms of the 2008 crisis that we saw. It's not similar to that, but it still feels that there is some part of stress coming in, especially on the financial sector. That is a concern, and that everyone needs to be mindful of this situation, and get back to the inflation, get it back on the track and get it back on the path without starting a recession worry coming in there. Last comment that we have is coming in from Peter Schiff, and this one is in terms of the April Empire State Manufacturing Survey, which has unexpectedly seen a bit of a collapse coming in of around 40 points there. From 10.8%, it's gone to 31.8%, I beg your pardon. So obviously, outside the COVID lockdown, that's the biggest MOM drop that they have seen coming in. New orders also have fallen the most in COVID as well. So indicating that the recession the Fed expects will be anything but a mild. So yes, that's a worry coming in again there. And these are the key highlights that we've got from the global guests coming in overall.
Thanks very much, Vinny, for summing up all that in global commentary. Well, let's get a move right on then and find out what levels we're tracking on the index, as well as, more importantly, on the Nifty Bank. Kunal as well as Nooresh joining in right now. And Kunal, let's get in your take then on the Nifty Bank, because you were ready, mic'd up, and we were, ready to really hit that gong and really pop the bubbly, if you will, but it was so close, and then that decline came in, and we're talking about that participation as well from the private banks versus PSU banks. What's your take on the Nifty Bank?
I think we missed it by 10 paise, not even 10 points for the Bank Nifty. But no regrets. I think the way in which the markets have approached in the last 1.5 odd months is just nothing short of exceptional. In fact, the the set of data points which I was actually looking out for was to try and compare the list of stocks from 14th of December closing to the closing of yesterday, and there's a stark difference in terms of the kind of stocks which have actually gained from the banking index. So, for example, the likes of CSB Bank, that's the top performer from the relative highs of 14th of December for the banking index. That's a stock which is up 11%. Most of the other stocks are marginally higher. So I think HDFC Bank, Kotak Bank, ICICI Bank, these stocks are up 1%, 3% approximately from their 14 December highs. And most of the other PSU banking names are actually down some 20%, 15% on an average from their 14 December highs. So that itself tells you that the composition of stocks in this move over the last 1.5 odd month has been completely different. It's more dependent on large cap names, and that's why the move would be more solid and it would be more sustainable, like what we've seen, like what we did not see last time around. So I think there should be more legs on the upside, maybe a delay of 1 or 2 days for the new high being hit, but I think it should be more sustainable this time around.
Nooresh, let's get in your outlook as well then on the markets and the overall setup. No regrets perhaps, but what are the levels that you're anticipating today?
So overall, expecting the markets to continue to in this slow and steady uptrend, which is where the target price has been 18,600, 800 for the Nifty, which is where you continue to ride. Now, Bank Nifty, after breaking out above that 43,700, becomes a buy on dips, and which is where if it sustains above this 44,000 mark, we could go towards 45,500. The only reason being a little conservative and making a buy on dips on the Bank Nifty is the fact that HDFC Bank, which is like 25-28% of the Bank Nifty, has not broken out. Kotak Mahindra Bank at least is closer to a breakout. The rest of the names continue to be in strong, say, trends. So if HDFC Bank breaks out, it becomes easier to go to that 45,500 mark in a faster way. So overall, the trend is positive. Going forward, we could continue to see this period of stock-specific returns. Till the time the trend continues, we don't need to fight it. So for now, the trend change points would be closer to 18,000 on the Nifty. And say after a week or so, we'll shift it to 18,200. So till that point of time, we continue to be in this momentum, ride it up.
Let's find out those stock-specific ideas as well. And Kunal, what's on your radar?
Well, from the auto stocks, Ashok Leyland is something which has come back into a breakout mode after quite some time. So I would suggest that as a buy, expecting a 10% up move for the stock in the near term. Targets of 166, stop loss 147. And the second would be a continuation buy on DLF. My earlier targets were around 450 mark, which the stock hit quite comfortably yesterday. So would revise the targets higher for traders who are looking at a fresh buy at current levels. 490 would be an immediate target and stop loss at 459.
Okay, let's find out what exactly is on Nooresh's radar as well. Nooresh, your buy calls?
So first is a buy on GAIL India. The stock gave a fresh breakout, a flag breakout done. The stock on a dividend adjusted basis is 1% away into an all-time high or almost there. The stock is setting up for a cup and handle move on that charts. So looks like a strong breakout in the making. A stop loss at 107 and a target price of 125. Second is a buy on Axis Bank. Continue to be bullish on the stock. The stock has given the breakout about 900 and trending up. Should expect a new all-time high here in it soon. A stop loss at 890 and a target price of 1,000.
Nooresh, I go back to that same point once again, that where is the participation in this market? FIs, while we may say that 13 days on the trot, it's been a linear buying trend, but the figure for the year, and that just come up on your screen, is still negative. B, open interest in the Bank Nifty and the Nifty in the aggregate market is not very high, even though we've seen a 1500 point rally on the Nifty. C, mutual funds are sitting on cash levels which are alarmingly high, and they are underperforming and markets are going higher. My limited point is that markets are going higher and everybody is like waiting, watching, waiting, watching.
So as of now, we are still not coming into the real phase of fear of missing out. If you look at the FII data points, the way the flows were, they were selling closer to 2,000, 1,500 crore, 2,000 days in the move from 17,500 to 16,800 on a daily basis. Then from 16,900 to 17,800, when we moved up, there were continuous buying from April, say 10th or 12th, all the way till it continued up till April 2nd week. That time also, we've not seen a similar, say, an equivalent number of 1500 crore buying on a regular basis. Now we've started seeing that 1500 crore plus days at 17,800 to 18,300, 18,400 levels. So once we start touching that 2,000, 3,000 crores on a regular basis, that is the time we get an indication that there is FOMO coming in from the FII side. And that's the time we'll see much more momentum. So as of now, we're not getting into the phase of FOMO or euphoria. We are not seeing small caps go berserk. We are seeing a steady move across the board. So the only time one would get a little bit of a scare is when we see huge buying days from FIIs, or you see a 3x move on the small cap index compared to the Nifty. So say over the next few sessions, if Nifty goes up 3%, small cap go up 5-8%, that is the time to be worried. Till that point of time, this slow and steady trend is good and the FOMO should continue.
Here's one more thought which I want to just, point out, that Nifty peaked out in October 2022 or October 2021, right? Nifty peaked out in October 2021.
The first high.
We are almost at an all-time high on the Nifty, almost 400 points. So that's about 2%. So mathematically, in terms of direction, you're not far away. Bank Nifty is almost at an all-time high. But if I look at the aggregate open interest for the Nifty and for the Bank Nifty, total market-wide open interest, like you were discussing, it is almost 20% lower.
And it is completely dramatic, Nikunj, because right now the positioning on the Bank Nifty and Nifty is completely contrast with the performance. I'll give you an example. On 14th of December, if you compare with 14th of December to 15th of May, 14th of December, the open interest for Bank Nifty was 1,21,000 contracts. Currently, the open interest is 92,000 contracts, which means traders are actually underweight on Bank Nifty, and that's a sector which has actually performed. As compared to this, the Nifty open interest on 14th of May was around 4,20,000 contracts, and currently the OI is 4,68,000 contracts. So the expectation is high on the Nifty, and that is underperforming. The expectation is low on the Bank Nifty, and that is outperforming.
I cannot be more clear and more, more louder than this. That, guys, this market has rallied, but trust me, there are only naysayers. There are only disbelievers. There is no participation. Everybody is in a disbelief that ye kya ho gaya. I mean, markets were not expected to go up by 1,500 points. Now, whether it is FI buying or whether it is, global money coming back into, global liquidity adjustment, whatever may be the underlying factor, or even inflation coming down. Bottom line here is that this is a rally which has startled everyone, has surprised everyone. Whether it is FOMO or lack of, belief, I guess if markets they continue to go higher, institutional investors will be forced to reduce their cash levels. FIs will be forced to increase their India allocation. Traders will be forced to, leverage in the F&O market, because directionally, when the markets go higher, you do not want to be underperforming this market. Kunal, like they say in Hindi, the biggest jealousy factor comes in the market जब पड़ोसी का पैसा बनने लगता है. And I think we are reaching there yet.
Absolutely, yes. That's why we say that it's a FOMO effect for the markets.
Yes, Naren feels that we are right in the middle. There is no FOMO, there is no excitement, and he feels that markets from here, in terms of valuation, may not really be giving you extraordinary returns.
Many of these companies have done extremely badly in the last 1 year, as you know. And most of those holders which were holding, they actually have been getting out of them in a very, very big way. So we saw an opportunity to look at those stocks as they fell. And they have been the worst performing stocks in the Indian market. And we are not opposed to looking at anything as long as we feel that the embedded value in them becomes more attractive. And that is the framework which we use for investing. And, many of our older sectors, which we were which we liked a lot, many of them have done extremely well. With our open approach to investing, we thought, why not consider them? But if you look at as a percentage of our assets under management, they are negligible. So while the market talks about our investing in them, if you look at the absolute percentages of our corpus, they are very, very small. But yes, we are willing to look at them. We will, if many of the new companies also come in them, which are more, they come at much more cheaper valuations. I don't see why we should not look at them if they come at reasonable valuations. Volatility in all the election years, and there is absolutely clear that volatility is given in election years. If you go back and look at 2003, 2003 markets were dirt cheap, and 2003 kind of market we are not seeing at this point of time, because market is no longer as cheap as they were in 2003. They are much more overvalued compared to 2003. To factor in 2003-4 is impossible. So I would say we have to, when you think of the election cycle, we have to believe that we are going to have some amount of volatility in the next 12 to 18 months. And that is why for us, both systematic investment plans and hybrid investing for lump sum, which is categories like aggressive hybrid equity and debt, balanced advantage, multi-asset, equity savings. These are all the ways to go for the next 12 to 18 months, along with systematic investment plans and systematic transfer plans. Because volatility is not going to go away in the next 12 to 18 months, both for global reasons due to the Federal Reserve and due to local reasons because of higher valuations. And that is how we think when we looked at where we are today.
Welcome back. Let's focus in then on individual earnings. And yesterday, you had PVR Inox, which came out with its numbers. This was the first quarter ever of the merged entities' combined performance. And it has been disappointing, to say the least. So therefore, of course, it's not comparable on a year-on-year or on a sequential basis. But the company came out with a net loss of about 334 crore rupees. Now, we were working with close to 100 crore rupee loss. This has come in far higher than what the street was anticipating. What's the reason for this? Well, that was a series of one-offs that the company had to undertake, a lot of exceptional items. So close to 10.8 crores impairment for capital work in progress, 10.5 crore rupees on depreciation on cinemas due to the proposed shutdown. Remember, they plan to shut down close to 50 screens over the next 6 months. There was close to 5 crore rupees for merger-related expenses, consultant advisory, legal, etc., and 134 crore rupees deferred tax write-offs as well that the company had to undertake. The revenues came in at about 1,143 crore rupees, and the company's EBITDA loss as well ballooned to about 526 crore rupees. And that was as well largely on the back of the fact that a lot of the operating metrics indicated that the average ticket price, the spends per head, the advertising revenue, which tends to have the highest margin, all of these came in lower than what had been expected, which is why you saw that mammoth EBITDA loss this time around. So just put it into perspective, average ticket price at about 239, average F&B spend per patron at about 119, and occupancy as well has fallen to about 22%. They have said that a lot of their properties which are loss-making or are housed in malls which have reached the end of their life cycle will now be shut down. So like I said, close to 50 cinemas over the next 6 months. Having said that, the managing director of PVR Inox, Ajay Bijli, saying that the year gone by has been the first year of these operations of the exhibition industry. There was a lot of volatility in the box office. They're saying that two factors that really marred the industry was the underperformance of Hindi films and less number of Hollywood releases, but he says both of these factors will ease out in FY24. So fingers crossed things do improve.
Oh, yeah, absolutely. Let's number crunch further and let's talk about how HPCL's performance was. Let's welcome on board Rajneesh Narang, the Director Finance and CFO at Hindustan Petroleum Corporation, joining in on the show right now. Mr. Narang, great to have you today on ET Now. Thank you so much for taking the time out. One can see that you've posted extremely strong GRMs, and that perhaps is one key reason for the outperformance that you've seen in fourth quarter. But I wanted to understand how sustainable is this, given that Singapore GRMs have come off?
Yeah, good morning, first of all, to everyone. Yes, this quarter rather has been an excellent quarter for HPCL, both in terms of physical as well as the financial performance. This was the quarter where we got the highest refining margins, the marketing margins were better, and in terms of physical performance, the refinery throughput was highest, and in the overall also we made the highest throughput. And the pipeline throughput was also the highest. Coming to your question regarding the refining margins, yes, the refining cracks have come down a bit, but that has enabled us to partially compensate on the marketing front. Yes, the refining margins do have, the GRMs have come down, but we feel that the current level of GRMs which we are making out right now in this, what we had in the last quarter, would continue in the near future also.
Sure. One thing that I wanted to understand was currently how much of Russian crude is HPCL importing, and at how much of a discount is it getting imported?
Yes, we are importing Russian crude to the extent that the same can be processed in our refineries, considering the configuration which we are having. As regards the discount level keeps on changing. It depends upon the availability of the crude and the number of players who are in the market. So we get a decent discount, that's what I can say. And all that also adds to the GRMs of the refineries.
Mr. Narang, morning. Now, the government had announced close to a 30,000 crore rupee capital support to OMCs in the FY24 budget. But the timing, the quantum, modalities, etc., that remains unclear. Can you share any details that you have on the same? And, if you could just walk us through any perspective that you've garnered in terms of communication?
Yeah, in the budget document, the government has declared that there would be a 30,000 crore capital support to the oil marketing companies. And this capital support was primarily for three reasons. One was the energy transition, net zero, and the green initiatives which these oil companies will have to undergo. So currently, we have not got any confirmation as to in what form and shape the compensation would be given. But yes, we are under discussion with the ministry, and what are the projects and all which we will have to execute under these categories. Those elements are being discussed with the ministry right now.
And also, HPCL announced a spin-off of the lubricant business with plans for value unlocking. If you could just give us some more details regarding the revenue, EBITDA, etc., from the lubricant business and any sort of valuations that you're looking at?
When this lubricant business is housed within HPCL, what we feel is that the HPCL is not getting the full value out of it. So that's primarily the reason. If you see HPCL, currently the EBITDA multiples which we get is around 5 to 5.5. But the lubricant market, the levels of market share we have and the EBITDA margins which we make, we feel that we should be getting around 10 to 12 multiple of the EV EBITDA over there. So considering that, we feel that the company's valuation should not be less than 12,000 crore as regards if we carve out the lubricant business of them.
Are you looking to list it separately then, Mr. Narang?
Can you just repeat, please?
I was wondering whether you're looking at listing the lubricant business separately.
We will be evaluating all the options and once we get all the regulatory approvals. But definitely, yes, there is a merit in looking at all the options through which we can maximize the value unlocking in this company.
That's great. You think it's a possibility it could happen within this financial year?
We intend to do it by the end of this financial year.
That's
We
great.
intend to do it by end of this financial year. Maybe depends upon the regulatory approvals also.
Right. I was also looking at, the fact that the government has announced about 3,000 crore rupees as capital support to the OMCs. Aside of that, also wanted to understand, in lieu of what you just talked about with regards to your lubricant business, whether HPCL is consolidating the renewable and new energy linked businesses. And if you could share some details regarding the same, what could be the rationale behind this? Will you be looking at a fundraise in this particular unit, if at all?
Yeah, along with the lubricant business, we had also come out with we got the board approval for setting up a new wholly owned subsidiary for our green initiatives. HPCL has exhaustive plans as regard the green portfolio is concerned, both in terms of renewables, in terms of biofuels, and in the near future, maybe green hydrogen and other initiatives which we would like to unfold. Now, coming to the funding and the capital structure of that company, definitely what we feel is we'll be able to raise the money at a far finer rate than what we are currently once we say that the green company is set up. And in near future, when the company is there, definitely we'll be raising market, and if need be, we'll also tap the market.
Next question is that I want to understand a very basic question.
Yeah.
One for the consumer and second for the shareholder. Which one should I ask you first?
Anyway, I am there to answer both. So
okay,
your choice.
The shareholder.
Yeah.
At the current prices of oil, what is your retail spread?
At the current levels, I can say that we are having a very decent level of margins, marketing margins. And I hope that the crude prices as well as the product cracks will remain at the current levels. I'm not looking at expecting that the prices will go up as regard the crude is concerned beyond 75 to 80 range. And at that levels and at the current RSPs, we are making healthy margins in the retail front.
Historically, it's been about 3 to 3.5 rupees. Is it higher than the historical average?
Yeah, one has to look at an integrated level. That is the way we have been operating in the entire last year. And if you look at the integrated level right now, the refining margins are a bit lower. They have come down. And on an overall basis, I can say that our margins are healthy.
Next question is for consumers. At what point of time do you think the crude price cut will be passed on? Where that 15-day calculation, which currently is not being adopted, will come back into play.
See, the crude as well as the product cracks has been quite volatile. Only a few days back, maybe 15 days back, the crude prices were hovering around $85, $87 a barrel. They have come down, and depending upon the geopolitical situation, it can any moment jump up and further increase. So we are closely monitoring the levels of the crude as well as the product cracks, and at an appropriate time, definitely the decision will be taken.
What you're telling us right now, there are no indications or intentions to cut the fuel retail prices.
I said no, it depends upon how the market behaves. The market has been quite volatile. Let some stability come as regards the product as well as the crude prices. Definitely we'll have a look at that moment of time and take the decision.
My final question, again, I go back to from shareholder to consumer, back to shareholder, and last question. So will FY24, if all things equal, which is if the current prices, they continue where they are, plus minus 5%, if the currency stays where it is, plus minus 1 or 2%, is HPCL in for a bumper year of profits? Because that will what will happen, because margins and demand, they've gone higher, GRMs have stabilized. So whatever you lost out in 2023 because of war, 2024 you would be in for a bumper year.
No, that would be primarily for several reasons, not only regarding the prices are concerned, but also that all the investment which HPCL has made, they have started now giving us the returns. Like last year, our Mumbai refinery got commissioned. We got the additional 2 million metric ton from the refinery. We also capitalized or completed two of our pipelines, major pipelines, one LPG pipeline from Hassan to Challapalli, another from Vijayawada to Dharmapuri. And in the month of March, in case of Vizag refinery, the CDU4 has got commissioned. So all these will also bring incremental revenues to us as well as the profits. So I feel that yes, if everything goes well and the current level of margins sustain, we'll have a good.
Appreciate your time. Thank you so much for joining in, Mr. Narang, and giving us more clarity. All right, let's get a move on then and shift gears, focus in on the stocks on the editor's radar. And I guess there's no brownie points for guessing that we're going to be discussing real estate stocks, Nikunj. What a phenomenal move we saw yesterday. Do you think it was the DLF effect, or are there other factors that are attributing to this stellar move in real estate stocks yesterday?
I think DLF surprised everybody, but that's like 3 months ago when they said, look, we managed to sell a large property of about 8,000 crore in less than 3 days. So that in a sense really was a realization factor for the capital market that the real estate demand is back and the real estate demand is here to stay, and because of RERA and other factors, what's happening essentially, you are going to be seeing a uptrend by good branded by good developers as they are going and marketing new projects. Also, please remember that last 12-18 months have been a period of high inflation prices, shortage of labor. All that adjustment also has started normalizing. And third and the foremost factor I feel, Avan, is that there is a change when interest rates they come down. You want to go back to real estate. Why? Because affordability factors which were coming under question because interest rates and home loan rates are going higher. I think that also is stabilizing. So there is a bit of a macro. There is a bit of a catch-up because after years of underperformance, real estate is making a comeback. And then there is this entire space where you've got a macro tech, DLF, those builders in a sense are now able to gain more market share because in India, real estate demand is real. Real estate demand is here to stay. It may go through patches of cyclicality, but the linear trend is that it will always be higher in a 3 to 5 year time frame. And these are under-owned sectors where institutional investors don't have any ownership. So a lot of factors have come to there. Nothing specific yesterday, but in terms of an outperforming sector, I think this sector has still a long way to go.
Yeah, and demand, as you said, is here to stay. Let's move on then. And this is a stock that we don't flag off too often on the channel, Sundaram Finance. In fact, the company is a South-based NBFC. They've incidentally not even raised capital in the last 40 years, but are going to be a huge beneficiary of the CV upcycle.
We don't realize it. They've not raised capital in the last 40 years. So imagine an NBFC which has managed to grow without raising capital, which means that they are just taking care of the equity shareholder. Best of the banks, best of the NBFCs, they really raise a lot of capital. Look, this is one of those, in South they say that don't buy gold but buy a stock of Sundaram Finance. They've gone through a change of guard and they've gone through a migration. In terms of quality, lending, risk understanding, everything is supreme for Sundaram Finance. I'm genuinely using these superlatives because I mean it, looking at the performance. Why have we got Sundaram Finance back on our radar? CV. And I also feel that typically when interest rates they peak out, NBFCs they start outperforming. We've seen traces of that last week in Bajaj Finance, Aditya Birla Financials. So the credit cost I think is good. NBFCs are looking strong. CV cycle is in a good space. The new management, it's old, about a year plus. I think things are changing there. This is a stock which I think will pop up. It's a stock which we don't talk about it too much because it's not a retail dominated stock. 2,400 rupee ka stock retail nahi dekhta hai. But I think keep eye on this one.
Okay, so Aisha, let's find out if our market experts as well are keeping an eye out on this one and lots more stocks.
Yeah, absolutely. Let's welcome on board Anand Tandon then. Anand, hi, morning. Can't help not talk about realty. What a fabulous reporter, number coming in from DLF. And the kind of rub-off it had on the rest of the realty pack as well. I mean, everything from an Oberoi Realty to a Godrej Properties, they were all zooming up yesterday. Still a buy?
I think, what we've seen so far is that top end of the market has not had any major impact. It's the bottom end which has reported problems, and you've seen that across the board in, for example, FMCG, etc. The numbers have not been very exciting in the year gone past. Going forward, however, we do expect some of that change as we expect, rural India to pick up in the current year. But the top end will continue to remain fairly robust. So I would imagine that for the near term at least, maybe another 6 months or so, the demand for reality should remain fairly strong. And that would obviously be reflected in the prices. What we are beginning to see, however, is that the housing starts, as it were. The intention to set up a new project has already peaked out in most of the cities. And what you're getting now is the pipeline that has been established over the last couple of years. So, 2 or 3 years down the road, you will find that the construction volumes start to fall, and that would actually mean that the demand has to fall off a little before. At least that's what the market seems to be signaling. But at least for the next 6 to 12 months, I don't see any.
So which one would you buy? DLF, Shobha, Macrotech, or all three?
So I think I would actually bet most on Bangalore because among the listed players, they are the ones that are most well represented. Actually, Hyderabad has been doing reasonably well as well, but again, the prices have gone up to a level where I would imagine that they will stabilize from here, and they need to spend some time in this range before they come down, before they start again. And to that extent, Bangalore remains relatively cheaper than most of the other metros, especially larger ones like Bombay. So all the players that are based out of that should do reasonably well.
Where can one go fresh long on realty?
So, I mean, out of the three names which Nikunj mentioned, I'll pick one, DLF. And I think there are other stocks like Oberoi Realty, which I think looks very strong. The stock has shown a lot more consistency in the last 2 years, 2.5 odd years. Godrej Properties is making a comeback again for itself, breaking past about the 200 DMAs. The stock was beaten down more than 50% from the 2021 highs. Was one of the first real estate stocks to get into a very sharp correction from 2021. So which means that on the way up, the stock would take its own sweet time, but then the recovery could also be quite strong for Godrej Properties. So I would stick to these, large cap, the F&O names from the real estate pack. DLF would be the first preference, followed by Oberoi Realty. From the non-F&O space, Anantraj Industries is something which also looks very attractive. The stock has consistently shifted range from 70, 75 earlier to 100 plus, and from those levels to now, I think at 140, 142, where the stock closed yesterday. So these are the few names which I would be looking out for, and extremely bullish, specifically on DLF.
Okay, a lot of other stocks which are going to be in focus. You just heard from the HPCL management as to how the GRMs have been very, very strong. The visibility, the fact that they are looking at listing their lubricant business as well within this fiscal itself. And ONGC and Oil India too, considering the windfall tax on crude petroleum has now been reduced to nil from the earlier 4,100 rupees per ton. So these two are going to be stocks which are going to be in focus. And then I'm not sure how invested you are in OMCs, or whether do you even believe in investing in this cluster?
So the energy space is certainly something that is of interest. The only problem is that because of the government intervention, it becomes a little difficult to predict. That said, as you mentioned, HPCL has reported sterling numbers, especially in terms of the marketing margins. It's been way more than expected, and overall, therefore, they have reported very good numbers. If they were actually to reach anywhere close to the 12,000 crores that the gentleman earlier mentioned, then the stock per se will look reasonably cheap. So, to my mind, gas is the place to be, because that's the place where later in the year, as the winter sets in most of Europe and North America, again the prices have a potential to spike quite hard, because while oil is more directly linked to how far the economy is progressing, gas to some extent also is a matter of the climate. So, the gas prices are the ones that are something that you will need to watch out for, and therefore anybody who's a gas producer like GAIL or even ONGC or any of the others which have some kind of gas availability is something that I would be more bullish on going forward. That said, the near-term cycle for refining also looks reasonably good.
So, what's been your portfolio strategy, Anand, of late in this market?
Obviously, the one way to look at it is that Reliance is everything. So you should just, first of all, and being an index stock, you need to be in that. The rest of it, HPCL looks to me quite attractive, largely because earlier there was that buzz that VPCL would be divested, and therefore to that extent the valuation gap between the two could possibly narrow. Even now, the valuations for HPCL are far cheaper. So that's another stock that you may want to look at. And as I mentioned, GAIL seems to me to be something that can be looked at in the longer term. If you want to be a little more adventurous, then something like a GSPL, which has both Gujarat Gas under it as well as its own industrial business, gives you a mix of both consumer as well as institutional business. And therefore, it's a fairly hedged portfolio.
Mine is energy. I mean, when I say what's been your portfolio strategy, I'm referring to the aggregate portfolio strategy, not just about energy stocks.
Well, the overall portfolio, if you look at it, clearly for this year, while I think the margins for most of the banks have peaked, you will have to look at financials as one of the largest areas that you have to be in, because that's where the earnings are going to come from. You are already getting signs of a significant uptick in terms of auto demand. And here I would argue that, the Bajaj Auto has performed very well in the near term. You might want to look at Hero. That has been less of a performer, looks reasonably attractively priced. And as I mentioned, is a good play perhaps even on the rural area, besides the fact that they've announced that they'll be putting out a new models ever so often during the course of this year. So auto is another place that attracts attention. Capital goods, to my mind, is good because the order books are strong and the earnings will come through, but they are fairly expensive. So I would be market weight on capital goods. If you look at the other parts of the market which have not done so well, for example, IT, I think it is looking like it's beginning to bottom out now. And while it is early days yet for it to move up, I think you may want to start keep an eye on it, because as and when the problems in the US banking sector actually were to be resolved, I think that's when you'll begin to see an upside coming from there. In the interim, pharma and other defensives like FMCG are places that you might want to hide.
Anand, the other category which has come out with stellar numbers has been the paints category. Of course, the crude cool-off benefit as well got embedded in this quarter. But be it Asian Paints performance, or I'm looking at Berger's performance as well, the gross margins have expanded 90 basis points. EBITDA is higher roughly by about 6.5%. A space you're liking?
Well, obviously both these companies have performed dramatically over the last many years, bar a few quarters here and there. So it's a consistent performing kind of space. But, the valuations leave me grossly uncomfortable. While there was a bit of a hiccup last year when a whole set of new companies announced that they will be getting into the paints business, the market perhaps overreacted a bit because it takes a while for them to make an impact in the market. And that dropped these stocks, but I think the market has quickly got over it. And the problem is that, again, the valuations look highly stretched to me. So at this stage, it's not a position that I'd be holding in any significant size.
Okay. Meantime, wanted to get in your take as well. I don't know, Anand, if you had a look at PVR Inox's numbers, and we did flag off just earlier today that the higher than expected net loss was due to a series of one-offs, and a lot of the operating metrics like spends per head or average ticket prices or even the advertising revenue came in much below what the street was expecting, which is why you saw that EBITDA loss this quarter. Have you had a look at the financials?
So I don't track that anymore. I think that's now a space which is going to be permanently damaged by the TOT that has come through. While people don't think that you will have people getting back into the halls fairly soon, the question is there is also quality lack in terms of the content that will drive the earnings. So unless they find a new model to get people into the halls, I'm a little skeptical of their ability to kind of get the same kind of growth that they were reporting before the COVID. So for now, I would stay away from that sector.
Yep, and bad movies as well.
Yeah, the content pipeline, they're saying so themselves. And the fact that the Hindi content has been below par, the fact that Hollywood releases have been fewer than expected. Regional has done well, but it hasn't really made up for it, Aisha. Okay, that aside then, let's get in a view, Nooresh, from you then as to what the outlook is on some of yesterday's movers in trade. Just taking a sense as to what really stood out then within the broader markets as well. And just allow me, to refresh my screen there. Okay, so let's get in a view as to what really stood out. Apart from, of course, real estate, you had names like Zensar Tech or an Ujjivan, Polyplex Corp. Those stocks surged. Nooresh, your view on the charts?
So Zensar is another example of what has been happening in the mid cap and small cap IT names. We've seen one by one the mid cap and the small cap IT names go up after the results. So Zensar has done the same. And the stock had corrected also a lot from a high of almost 550, 600. The stock came all the way down to 220 levels. Recovery has been strong. Volumes have been good in the last 2 days. It's just that the risk reward is no more great. But dips back to 330 to 360 zone would be a buying opportunity. So positive on the stock for the medium term. It's just a stock to be bought and dip. Ujjivan is something which I recommended yesterday. The stock looks very promising for the fact that the stock is available at the same prices where it was in 2016, available at the same prices where it was in 2019. Now, after the big crack in 2020 Feb to March, during COVID, the stock fell to 150, 170 levels, came back to the same prices in March 2022, and then it has made a steady recovery from those levels, went back to 300, 320 zones, which was the high in 2020 in. And this is where it's making a huge cup and handle breakout. The breakout is done, and going forward, it's a buy at current levels also. I would expect it to slowly and steadily go towards that 420 mark where it was before the pre-COVID prices.
Okay, just looking at a couple of buzzers yesterday, and Kunal, how can we not talk about what was going on with the Nifty Bank? Unfortunate as it may be, left behind by what, 10 paise? Yeah.
10 paise.
Yeah. But you know, I think the intriguing thing is that it was not a broad-based participation. ICICI Bank closed in flat. Barely any move for an HDFC Bank or Kotak as well. They were less than 0.5% a mover. What are you making? Where is the strength really coming in from within banks?
No, so I think it's collective move from most of the banking names and large cap banking names. So, I did a comparison from 14th of December to 15th of May yesterday on how the movement of Bank Nifty has happened and which are the stocks which have actually moved up higher. And it's intriguing because the likes of HDFC Bank, ICICI Bank, they are up 1% to 3% from their 14th December highs. Again, at these point of times, at current rates, they are nowhere close to their 52-week highs for themselves or even life highs for themselves. The likes of AU Bank has outperformed, CSP Bank, that's a stock which has outperformed. But most of the other names, the PSU banking pack, the likes of SBI, Yes Bank, most of the other banking names, even Axis Bank and IndusInd Bank, they're significantly below their 14th December highs. So which means that the move is more powered towards large cap names. So what happened in December 2022 or in the fag end of 2022, it was more PSU banking stocks which were leading the charge. Right now, the move is more formidable towards large cap private sector names. And that's what I believe that the context is that in December, the markets were looking a bit more frothy, or the move for the bank index was looking a bit more frothy because of the way the PSU banking stocks were moving. Right now, the move looks to be more stable because the large cap private sector banks have started to participate one by one. So I think that's the change for the Bank Nifty texture. And that's why I believe that the move could be sustainable, as well as hopefully we'll get the breakout this time around.
You know what is banks near 52-week high, SBI 8%, not sure what this graph means actually. Because SBI is not at a 52-week high. Please take it out. SBI is not at a 52-week high. That I'm reasonably sure because SBI is, from last December, SBI is down 3%. So my apologies, we'll fix that data. Anand, the call for PSU banks in 2022 was they were cheap. NPA cycles had bottomed out. Credit cycle had started. They have strong CASA. And you can only lend if you have cash. And that's how PSU banks came back, whether it is SBI, BOB or Union Bank. Low NPAs, strong CASA, strong credit growth. And they benefited because of that. Do you think this is yesterday's story or this is still tomorrow's trend?
Well, the themes that you mentioned remain. The question is which of them will have the highest ability to get liabilities cheap. Given the fact that to some extent it looks like there is an interest rate pause, it becomes a little less of a issue. But I would still retain, if at all you want to be in it, I would think the largest banks are the best. Having dealt with public sector banks for a long time, it appears to me that some of the smaller banks really have no understanding of credit. And they pretty much go where the market is, and that will mean that as the market becomes overheated in terms of and I have to admit it's early days yet, so it's not as if currently you are anywhere close to overheating. But in the next 6-8 months, you would imagine that if credit growth was to stay where it is, they will begin to build up bad credit again. So to my mind, SBI is the king of the lot. There is no question, both in terms of size as well as in terms of their ability to understand credit. Bank of Baroda is possibly good. Union Bank always has had some amount of presence in NRI segment, etc., and therefore does reasonably well. But otherwise, I would not go too far down the curve, though there are some opportunities like Canara, etc., which on the valuation basis look fairly okay. But it's much better to focus on high quality public sector and private sector names at this stage. That's where you'll make the best in terms of the portfolio on a risk return basis.
Colgate Palmolive. Yes, I'm saying Colgate. When did we last discuss Colgate? Should we discuss it? Because yesterday's volume action was six times more than the 10-day average.
Yeah, there's a different change for FMCG. In fact, FMCG was the first sector to make a fresh 52-week high in this last 1.5 odd month. It was then followed by Auto Index, and now we are on the verge of Bank Nifty making a new high. So, and I think even from the FMCG pack, Colgate, after yesterday's move also, I think the stock is some 8% or 9% lower than its previous 52-week highs. HUL, Dabur, these stocks have underperformed from the entire FMCG pack. It's the likes of Nestle, Britannia, which have actually done exceptionally well. ITC, of course, is the other stock which has done exceptionally well in the last 1.5 odd year, or as well as in the last 1 to 2 months of this strong price recovery. So it's a different mix, as I said, Nikunj, for the entire sector. For various sectors, you don't have the traditional stocks which are moving up higher. You have a different set of mix this time around, and same is the case with FMCG names.
Right, okay. Let's get some mid-cap ideas going as well on that note. And Nooresh, what's on your mid-cap radar?
So that would be a buy on L&T Finance Holdings. The stock is finally on verge of that 1.5 year, 2 year breakout. The last time also it faltered around 95 to 100 levels. It attempted it 3 times in between November to February, corrected all the way down to 80 and has now made a recovery to 9500. This was the high in 2021, again 3 times. So it has been a multiple attempts around that 9500 mark. The indication that it could break out is for the fact that for the last a week or two, the stock has been sustaining around 95 and making a base higher. Expecting this to break out and go to the prices of 120-25 levels, which was the high pre-COVID. So a buy at current levels with a stop loss at 94 and an initial target price of 120.
Kunal, what about your mid-cap list?
Well, that's a buy on RateGain. That's a stock which has done exceptionally well. I think on 5th of May as well, I had recommended the stock with a potential target of 380-400. The stock has crossed those 400 levels. I think at 410 plus levels, it looks attractive for another 7 to 8% on the upside. 440 could be an immediate target. Stop loss at 405.
All right, let's move right on then and get you all of the news and updates that we're tracking across the world. Turkey's electoral chief has said that the presidential race will go for a second round on the 28th of May as the incumbent Erdogan fell short of an outright victory. This election comes at a very crucial time when the country is struggling with high inflation and recently suffered devastating earthquakes. Moving on, in more drama with Elon Musk, the Tesla boss has expressed concerns over the company's hiring practices, adding that he needs to see a list of all the VPs hiring requests once a week in order to gain better understanding of the process. Meantime, once a digital media darling, the Vice Media Group has filed for bankruptcy protection after years of financial troubles. The company, once valued at $5.7 billion, has been restructuring and cutting jobs across their global news business over the recent months. And the Supreme Court back home is all set to hear the plea challenging the Kerala High Court order refusing the stay of the release of the movie The Kerala Story, which hit theatres on the 5th of May. While West Bengal has banned the movie after 3 days of its screening in theatres, Tamil Nadu has not banned the film, but exhibitors have withdrawn from cinema halls owing to security concerns.
Meantime, Gujarat Titans defeated Sunrisers Hyderabad by 34 runs in the match 62 of IPL 2023 just yesterday at the Narendra Modi Stadium in Ahmedabad on Monday. In fact, the win helped Gujarat Titans become the first team to qualify for playoffs, knocking out Sunrise Hyderabad. In fact, a century from Shubham Gill and a 4-wicket haul from Mohit Sharma and Mohammad Shami aided Gujarat Titans. And Gauri Khan launched her book, My Life in Design, and doting husband Shah Rukh Khan was also present at the launch event. This book will feature many unseen pictures of the couple's house, that's Mannat in Mumbai. Also, Anushka Sharma and Miss World Manushi Chillar will debut at the Cannes Film Festival for the first time this year. Remember, Aishwarya Rai, Vidya Balan, Sonam Kapoor and some other Bollywood actresses have already made their presence at this prestigious film festival in the recent few years. Also, the valley is blooming with tourists yet again. Statistics have been showing that in year 2022, 1 crore 88 lakh tourists visited Jammu and Kashmir, and filmmakers have liked and identified 300 spots now for shooting and filmmaking.
All right, those are all the news and update stories to track, but let's move right on then and find out what the khabar is on D Street. Well, spot LNG prices have seen a decline, falling to $10 per MMBTU levels. Which companies stand to gain, and how will this affect the Morbi gas prices? My colleague Somit is here to explain the impact of this on spot LNG prices. Somit?
Well, if you see the Asia spot LNG prices, they have come down to around $10 per MMBTU mark. Now, this lower spot gas prices is beneficial for city gas distribution companies and gas transmission companies. But among these companies, it benefits Gujarat Gas the most, because that is one company that imports spot gas most among the city gas distribution companies and gas transmission companies, because it serves industrial and commercial units much higher than what the other companies are doing. Now, every $1 per MMBTU drop in gas prices technically reduces the gas prices in the Morbi region by around 3 to 3.5 rupees per SCM. Now, if you see the current gas prices in Morbi region, they stand at around 40.6 rupees. And given the recent $2 per MMBTU mark from the start of this month, can reduce the gas prices in Morbi region to around 33 to 34 rupees per SCM. Now, this as compared to the propane prices, which is the competition for gas in Morbi region. Now, propane prices stand at around 39 rupees per MMBTU. Now, how does this drop in gas prices benefit Gujarat Gas? Now, either this gives Gujarat Gas the leeway to earn more margins, or it gives them a leeway to cut prices and grab more volumes. On both the ways, the Gujarat Gas stands to benefit if gas prices, that is the spot gas prices, drop, because either they will earn more margins or they'll get more volumes going forward. So that's the reason Gujarat Gas is in focus, because spot LNG prices have come down to around $10 per MMBTU.
Okay, we'll leave it at that, Somit. Thanks for all that buzz on D Street. But Realty Major, DLF and NBFC, Sundaram Finance have made it to Nikunj's list. So let's hear out his rationale on these cluster of stocks.
You know, I think DLF surprised everybody, but that's like 3 months ago when they said, look, we managed to sell a large property of about 8,000 crore in less than 3 days. So that in a sense really was a realization factor for the capital market that the real estate demand is back and the real estate demand is here to stay. And because of RERA and other factors, what's happening essentially, you are going to be seeing a uptrend by good branded by good developers as they are going and marketing new projects. Also, please remember that last 12-18 months have been a period of high inflation prices, shortage of labor. All that adjustment also has started normalizing. And third and the foremost factor I feel, Avan, is that there is a change when interest rates they come down. You want to go back to real estate. Why? Because affordability factors which were coming under question because interest rates and home loan rates are going higher. I think that also is stabilizing. So there is a bit of a macro. There is a bit of a catch-up because after years of underperformance, real estate is making a comeback. And then there is this entire space where you've got a macro tech, DLF, those builders in a sense are now able to gain more market share because in India, real estate demand is real. Real estate demand is here to stay. It may go through patches of cyclicality, but the linear trend is that it will always be higher in a 3 to 5 year time frame. And these are under-owned sectors where institutional investors don't have any ownership. So a lot of factors have come to there. Nothing specific yesterday, but in terms of an outperforming sector, I think this sector has still a long way to go.
Yeah, and demand, as you said, is here to stay. Let's move on then. And this is a stock that we don't flag off too often on the channel, Sundaram Finance. In fact, the company is a South-based NBFC. They've incidentally not even raised capital in the last 40 years, but are going to be a huge beneficiary of the CV upcycle.
We don't realize it. They've not raised capital in the last 40 years. So imagine an NBFC which has managed to grow without raising capital, which means that they are just taking care of the equity shareholder. Best of the banks, best of the NBFCs, they really raise a lot of capital. Look, this is one of those, in South they say that don't buy gold but buy a stock of Sundaram Finance. They've gone through a change of guard and they've gone through a migration. in terms of quality, lending, risk understanding, everything is supreme for Sundaram Finance. I'm genuinely using these superlatives because I mean it, looking at the performance. Why have we got Sundaram Finance back on our radar? CV. And I also feel that typically when interest rates they peak out, NBFCs they start outperforming. We've seen traces of that last week in Bajaj Finance, Aditya Birla Financials. So the credit cost I think is good. NBFCs are looking strong. CV cycle is in a good space. The new management, it's old, about a year plus. I think things are changing there. This is a stock which I think will pop up. It's a stock which we don't talk about it too much because it's not a retail dominated stock. 2400 rupee ka stock retail nahi dekhta hai. But I think keep eye on this one.
All right, let's get a move on then and focus in on the index calls for the day and what is it that our chartists are advising. Remember, yesterday we saw massive scale up in markets as well as on the Nifty Bank Index. Buy according to Kunal, he says momentum is intact. Nooresh saying it's a hold call on the Nifty Index. Let's find out what the view is on the Nifty Bank. It looks like it's a unanimous buy, though Nooresh believes that it's not at the current levels, but a buy on dip strategy is a more prudent one.
I want to look at home first. Why am I bringing it up? Because it fell yesterday on very, very, very strong volumes. Kunal, you track this one, home first?
Oh, not really.
Nuresh, can I take my chance with this one? Home first?
Yeah, so tracking that one, there was a big block deal yesterday in terms of change of hands between PE funds, etc. The stock has been seeing that for the last almost 3 months. There was a similar block in March, much higher size. So it seems like a change of hands is happening here. The stock looks very interesting technically. The stock has made a base around 650, 700 for the last 1.5 years. And now once it breaks out about 740 levels and sustains, it could be a trend change. So looking at the stock for a breakout move, it came very close to the breakout day before and then we saw this block happen. But seems like once the block deals etc. is over, the stock has a possibility of breaking out about 740. So at current levels, it's a risk reward entry wherein you could keep a stop loss at 665 levels and expect eventually that breakout to take place.
Let me tell you tale of two retailers. Kunal, you want to guess which two retailers I'll talk about? Tale of two retailers, mirror image. Trent and Avenue Supermart. Let's look at it. Trent is just marching to a new high. Avenue Supermart is hitting new lows every day. 52-week change for Trent, 41%. 52-week change for Avenue Supermart. It would actually be a mirror image. There you go. 52-week change for Avenue Supermart, down 3%. Just not going anywhere.
I think even ABFRL is at a 52.
I mean, ABFRL, I don't know what they do, Kunal. I mean, I'll be very frank and honest. I mean, they're reducing debt, yes, but then why are they acquiring? They're spreading themselves too thin. It's a Birla Group company. First you acquired Pantaloon, then you acquired this ethnic wear business of TCNS, and that's a share swap deal. Then you're trying to move into the innerwear segment. You're trying to get Gallery Lafayette into India. Bhai, kar kya rahe ho? That is my biggest challenge with ABFRL. It's a Birla Group company. Are they just making... And they're experimenting too much. But here's Trend focused. Focus. Only Zara, value retail, take Zodab, mixed arbs are higher. Avenue Supermart, I think, is suffering because of high valuations. I mean, not that there is anything wrong with the business proposition. I mean, think about it. We are talking about every retailer like Big Basket and others. They are running out to get into the food grocery market with delivery. Avenue Supermart does not deliver. They said that delivering shampoos and soaps and other toiletries and other groceries is a loss-making proposition if you're going to the customer. Tell the customer, come to us. If he comes to our store, he will choose more and we will sell more. There's a very big strategy in what Noel and Mr. Damani is trying to do. I think they are suffering because of the inflation and the dynamics because it's an expensive stock. But very focused in terms of strategy. First rates will just come up on your screen now. It's Tuesday morning. We've had a good Monday and will it be a good Tuesday? It's a decent start. Tata Motors 533, that's popping up right on your screen. We've got the breadth. And this I think is the talking point now that Nifty may not do anything. Bank Nifty is marching higher gradually, but it's a market breadth which has opened up right in favor of the bulls. The bulls are saying that now we need to jump on the bandwagon. The Johnny Come Lately crowd is, I think, getting desperate. It's evident. So it's not like a party party or a great pop-up start for benchmark indices, but a lot of mid-cap individual stocks, 2%, 3%, 4%, 5%. I think that really seems to be the order of the day. On a day, Aisha, when the mid-cap index, Nifty is flat, the small-cap index is up almost 0.5%, and the mid-cap index is up nearly 0.3%.
What's the Nifty Bank up to, and have we made it to a fresh high on the Nifty Bank, considering yesterday we just fell short of 10 paise? Unfortunately not. 43,975 is where we're currently at. The Nifty Bank should make it there. It's not a big move that you're seeing on the Nifty Bank this morning. A lot of stocks in focus. Let's start off with HPCL. That's markup performance, the GRM reporters, the fact that they're looking at listing their lubricant business 0.6% higher for HPCL as we speak. ONGC, windfall tax on crude petroleum has been now reduced to nil. ONGC starts off with a gain of about 1.5%. Slew of numbers there. There's of course PVR. While the numbers, yes, have reported a loss, there's been a 50-screen shutdown as well. The stock starts off lower by 3.5%. On the other hand, Ultratech Cement is looking at commissioning a brownfield cement capacity in the state of Rajasthan. So that's another stock which is in focus this morning. Berger Paints has come out with decent numbers after Asian. Their EBITDA is higher by about 6.5%. The gross margins have expanded about 90 basis points, but not seeing much excitement on Berger. Astral, Pfizer, they've all come out with good bangs. Suryodaya Small Finance Bank, Uttam Sugar. These are a bunch of earnings which the market would be reacting to this morning. Of course, there's Home First Finance, wherein Norges Bank and Society Generale have been buyer in the block deals. So those two stocks as well are in focus. And then, of course, on the downtick, while, of course, PVR is reacting quite negatively to its numbers, there's also MK Global, PNG Health, there's Coromandel International, wherein the profits have been lower by 15% and margins also have contracted nearly about 200 basis points. But yeah, some of these stocks not really seeing much of a reaction. Tata Motors, Hero MotoCorp, the two star performers from yesterday, besides of course the entire realty pack. DLF I can see is still holding out in the green. Tata Motors takes a bit of a pause. Hero MotoCorp will come up here on your screens next. Still going higher, 27.12 on that stock now. Oberoi Realty, Godrej Properties also would be worth taking a relook at. But Kunal, very tempered move on the index, not complaining, but nothing exciting as of now. What are you spotting in terms of a trade?
Yeah, nothing exciting. Again, the same old theme which we've been going through in the last couple of days. The index opens on a bit of a muted note. The action is more stock specific, and the second half is where we see the index action picking up. So let's hope that this time around it's a very similar texture for the markets. The stock which I'd be looking to trade in the open would be ICICI Bank. Looks extremely attractive at the 940 plus mark for itself. And I think that's a stock which is forming an ascending triangle on the hourly chart. So would be expecting a big breakout for ICICI Bank soon.
Okay, and a big breakout for ICICI Bank expected with a stock at about 945 currently. What about you, Nooresh? What's the first trade you're punching in with 18,400 intact on the screen?
So we're looking at L&T Finance Holding. That's the one which is trying to make a 1.5 to 2 year breakout. Looks very promising. Could go back to 120.25 levels, which is where it was pre-COVID. So expecting this to break out over the next few sessions.